Hello and welcome to this edition of Currency Camp from Hyderabad, brought to you by Alpari Financials and partner exchange MCX SX. Hyderabad is a place known for its biryani and charminar, and also people who have gone quite ahead in their software and IT entrepreneurship. The currency markets have been very volatile in the recent few months, as other asset classes as well, whether it's equities or commodities, and it is imperative to now start hedging your exposure in forex. So whether you are an SME, exporter, importer, or a household with an forex exposure, it's important to start hedging your positions in the currency derivatives. Let's introduce our first speaker then, and I call upon Mr. Pramit Brahmbhatt. He is CEO Alpari Financials, and he would give you a view on how the markets have grown in the last few years, the volume, the participation, and which is the best way that you can participate into this instrument.
When it's a requirement, I think your own requirement, whether you are importing or exporting. The Indian currency market is growing pretty fast, as we have seen from 3 years back when it started, from 800 crore to 60,000 crore. It's a very commendable growth we have seen. And there is always an upside in this market. In coming 5 years, we will see this market will be the highest traded market compared to the other two markets, which is equity market and the commodity market in India. Well, this is the base side of the currency market. Due to the downgrade or upgrade, or whether the any country is doing good or bad, it's not going to make a huge difference in the currency market. It will do only a good thing. It will bring the volatility. Either you can be on a buy side or the sell side. If the market is going up, you can be on a buy side, and the currency is coming down, you can be on the sell side and take the advantage of both the situation. So that is a unique characteristic of this market, and it will always give a good entry and exit point to the investors. As our investment and the spending pattern has changed, 20 years back all our money used to be in the bank account or in the property. From there we slowly started investing in the equity market, also in the gold. Gold from the investment as a jewelry, it has changed as a pure investment where people are buying the ETFs and the physical gold. So the investment pattern has changed. The same way the spending pattern has changed. 20 years back the spending was very less. Now India has become a very brand conscious. A lot of brands are coming and the youth wants to spend the money. So when you want to spend the money, it has to be the same way. You have to earn that money and invest your money in a way that you can have a rapid cash coming in. So that way currency market can help the investor to have a shorter term investment and a frequent investment, and that's how it will help them to keep up with the spending. Well, to develop the market, the first thing is to educate the investor. Until the investors won't come to the market won't expand and the market won't develop. So the education is very important, because the educated investor is a long-term investor and the loyal investor. So the education is the foremost. I would say foreign direct investment, they are not going to invest in the currency as such, because they would be getting their exposure covered through the currency market. And if they are allowed within the scope with their enough caution and the risk management, then definitely it will help. But we have got very bad examples in the past in the Southeast Asian countries, where the currency markets were open up and the countries become fully convertible, and that made a huge damage to those economies. So that is a bad example set in front of us, and we have to learn from that rather than burning our own hands.
Let's go across to you, Venkatraman now. He is ED MCX SX, for a view on how the exchanges stand on the currency derivatives right now and what kind of participation or outlook do they have on this.
We have a good set of traders in the Indian markets who trade in equity cash and equity futures.
If you look at the Indian trade has been growing.
and the India's growth story is still intact. And if you look at compared to Western economies, the Indian economy is still putting a higher growth rate. So definitely there will be an active market for the currencies. And if you look at the turnover over the past 3 years has been a 10-setter. So I see a very good prospect for the growth of the currency market in India. And the regulators are also doing a calibrated reforms to ensure that the reforms are introduced as and at the times of need, so that the market grows effectively and continuously. The exchanges they have what I call is at a 3I concept. One is exchanges, they provide the information to the market participants, information in terms of whatever regulations are there, information in terms of traded prices, information in terms of market data. Then they provide investor protection. That means they provide the investor protection, and the most important thing, they provide investor education. So as and when more asset classes are introduced into the Indian markets, the investor education is a key element in that. That has been the stated objective of both the SEBI and the RBI and the Government of India. I am expecting a manifold growth in this market because if you look at the reforms that are introduced, 2008 the market came in, March 2009 the open interest limits were enhanced by the regulators. Then in February 2010 we have introduced other currency pairs. In October 2010 options were introduced. So if you look at, more reforms are likely to be introduced in the currency market, and the volumes will explode in the years to come.
Thank you for that, Mr. Venkatraman. As you rightly pointed out, this is a transparent, liquid and a very standard market with lots of interest coming into this one. With that, we'll head into a very short break, but much more and more panelists coming on the other side. Welcome back to this currency camp edition of Hyderabad, and let's go across to Mr. Uday Mitra now, who is Head of Treasury UCO Bank, and get an understanding of where the currency markets are headed and what is the impact of inflation and interest rates on this derivative market.
Getting derivative 100 times more than your sales volume is simply uncalled for. Prediction of currency movement long term is a very difficult job, and mostly it is not coming true. It's not for me alone, it's for everybody almost. For the beginners, I will say that they should try only one pair, USD INR, where the market is very deep and liquid. Okay, and the price discovery is good. You see, if you see that global volume of the entire forex market, it is around $4 trillion. Whereas Indian market volume is around $30 billion. Okay, 30 billion is no mean sum by any standard. Out of which 7 billion is merchant. So almost 25% of the Indian forex turnover is based on the merchant turnover. With the global slowdown, what will happen? Exports will come down. Similarly, imports may also come down, little bit here and there. So the merchant volume will come down. It has happened in 2009-10 when the export volume actually came down by 2.2%. So I feel if the global crisis continued, the currency volume may not increase to a great extent. Which currency can replace USD? Okay, the probable answer, most of us may answer that it is Euro. Some of the experts, they are already started commenting or rather predicting the doomsday of Euro. So nobody will believe that Euro has real strength to replace dollar as a global reserve currency. Second one could be Chinese yuan. If you want to be a global currency, what is the first period? It should be fully convertible. Is yuan fully convertible now? Answer is no. Answer is no. Then which one can replace? Gold. There are supporters of gold, but it's not possible. It's not simply possible. And then most importantly, all the central banks, they are having their reserves. 62% of the entire global reserve is in central bank's reserve is in US dollar.
Let's get in Mr. Ramaswamy Annam now. He is Director Business Development, Brickwork Rating India, to get his view on how the corporates are making use of this platform of currency derivatives available to them.
I really have to see somebody saying Hyderabad is a good market for forex exchange. I think we have a long way to go. I would say on this chapter of this currencies, etc., it has really come of age. Really come of age. I'll tell you a simple indicator. Around 15 years back, I remember we tried to do a similar show what Manisha is doing today. And I can assure you, today you have a house full on a Saturday evening, so many people coming and hearing about you. 15 years back, we tried to do the same thing, same set of arrangements. Let me assure you, there were more people on the dais and less people off it. That was the scenario, and today you see. So the awareness and the reason for so many things, So it is changing, the interest is going up, businesses are moving, the need to do this trading all across, and including currency. Currency was the last possible asset class people thought of. I think the only time when people thought of currency was, you're going abroad, that was it. When you're actually physically going abroad, you need this, like a limited number of dollars or whatever it is. I would like to add, touch upon one simple phenomena which has happened. I don't know how many of you are tracking it or... It is this downgrade of the US economy by Standard & Poor's. It's a very interesting phenomena, for a lot of reasons. Because US always felt, it is US versus rest of the world. And this downgrade by Standard & Poor's, it would have, as we go forward on every currency, dollar versus every currency, and probably dollar may not be the global currency as we go forward. It's not only Standard & Poor's rating. Look at the other aspect. The other two major rating agencies, Moody's has not downgraded them. Fitch has also not downgraded them. I think what the market should look for is the action of these two. These ratings take their own time to show their implications, but they do show. So it could probably be a year later. It may not have, normally, the stock prices, they say the stock prices factors everything. Similarly, the currency prices do factor everything what happens in the economy. So I'm not too sure whether this current volatility or what you're talking of or whatever has happened in the last 1 month has priced the downgrade of US economy. But as we go forward, my reading is maybe a year later, maybe sometime next August, you will see the full implication of this rating downgrade by Standard & Poor's, and even probably, I have a feeling, either Moody's or Fitch could also take it up. So you should track that.
With that, let's head into a very short break. We'll be back soon. Well, we have discussed a lot about the currency markets, on awareness, on volatility. But let me start with you, Mr. Venkatraman. Let's start with the awareness part first. Of course, we have seen the volumes jump up quite strongly from August 2008 to till time. Amit, of course, has mentioned that. You also mentioned that. Where do you have seen these volumes come in from? What are the kind of participants that have actually come into the market?
Yeah, if you look at effectively, three sets of people have been involved in making these volumes. The first is the banks, because banks are providing precisely the market makers and the market users. They provide the price support in the OTC market to all the exporters, importers. So they are the natural choice. So the banking segment is one which is doing a lot. And next is the day traders, because we have a good set of traders in the Indian markets who trade in equity cash and equity futures and commodities. So the second set of participants are the day traders, and the third and the last category is the high net worth individuals. As I said, the retail participation is also increasing. So if you look at the traders and the banks put together will be anywhere between 85 to 90%. And the HNI and the retail clients will be at anywhere between 8 to 10%. Why I am clubbing both the banks and traders together is because banks, sometimes they provide support, sometimes they trade. That's why I am clubbing these two. So this is the broad breakup of where we are getting the volumes.
All right. Ramit, to you now. I mean, of course, you speak to your clients on a day-to-day basis. The movement in the markets has been so much. Are people really making money? I mean, are they able to hedge properly in the currency markets?
Well, we have to look at from two different aspects. One is from the hedging and one is from trading. When it's a requirement hedging, you do not need to look at how the market is reacting, but you have to look at your own requirement, whether you are importing or exporting, and accordingly you hedge. When it comes to trading, you have to be opportunistic to take that opportunity and to understand whether the market is reaching its high or lows and whether you can enter at this time. So we try to segregate both the aspects, depend on the client's need.
Mr. Mitra, as a banker, I mean, of course, the way the rupee has moved, as a banker, how much of an importance would you give to the derivatives market? Totally the kind of volume run-up that we have seen, the participation, of course, has been much on the higher side.
Well, if there is a volatility, so it gives you an opportunity to make some profit also. And simultaneously, there is equally or more glaring chance of losing the money. So use of derivative is a very, very important thing because at least those who are people can hedge, people can take protection. But while hedging, counterparty risk has to be taken into account, and there should not be, I should say, the derivative should be used for hedging purposes only and not for any other purpose, not for speculative purpose. Okay, getting derivative 100 times more than your sales volume is simply uncalled for.
Let me get your view as well, Mr. Ramaswamy, on this. I mean, do you think a lot of corporates, since you are from the management association, would you say that a lot of corporates do give currency its due, that they do go out and hedge?
No, absolutely. I've seen very, very less volumes. I don't know the experience of.
Is it because of lack of awareness, or?
It's just a laid back attitude कि ठीक है export कर दिया है पैसा आ जाएगा, import करेंगे पैसा दे देंगे. But I'm not too sure if many of them are doing. At least a decade back they were not doing it. Like Hyderabad is a place where slightly different if I to say the presence of NBFCs started with Karvi and ended with Karvi. Here really only one company. Similarly, even if there are on the forex, I'm not too sure. In fact, I really have to see somebody saying Hyderabad is a good market for forex exchange. I think we have a long way to go.
Shamit, I have to have you to answer that.
Well, I agree to one of the point where the small size and medium size enterprises, they are not very keen on hedging because the mentality shift from the hedging or risk management to the speculative mentality. They said, okay, rupee, if they are importing, they become a bias that, okay, rupee is not going to go to 46 level, it's going to even come down further. And if you're exporting, you get the other side of that. So the mentality changes from the hedging to the speculative, and that's where it gets a bit bad situation for the exporter and importer, yes. But in terms of the market, I would disagree with him because we are doing quite good over here and there is a lot of interest. Obviously, we need to do more training and more education for the investors, but there is a lot of interest here.
Just to add a point to what Pramit has said, the entire Andhra Pradesh is a very good state for the export-import levels of the country because you have good software companies here, good pharmaceutical companies here, textile units are here. So more and more companies are coming into the hedging segment. So I think I need to fill Ram at the current status of the market because I take it from the way in which RBI has introduced the reforms in the market as well. In 92 they allowed forward booking. Then they allowed free booking and cancellation of the forward contracts. 2003 they introduced options. 2008 they introduced currency futures.
Sure.
So RBI is also closely watching the market. So India has been seeing a calibrated reforms in the entire trading segment, in the trade sector. And the trade sector has been opened up for liberalization. It's almost a capital account convertibility for the trade sector. So effectively, unless RBI and SEBI are convinced that more people are into this hedging, they would not have allowed these products to come into India. So if you look at vis-a-vis the regulatory regime and the products that are introduced, I am sure the level of hedges which the corporates are doing have definitely gone up from what we have seen in the last decade. I think some of the corporates sitting here may vouch for that. That's the...
Okay. We were making a point that Indian rupee, the USD INR pair makes the maximum involvement from the participants. Rupee has declined more than 3%, but while Euro does more than 4% of a movement on a weekly basis. So would you say as Indians we still are biased, or since we have more exposure anyway in sense of USD INR?
Well, I would say from the retail investors or the day trader, the scope of trading in the currency market from dollar INR is shifting to Euro INR as well as GBP INR because they are finding more volatility and more opportunities If you see the dollar INR, there is a 30 paisa, 40 paisa movement, but that opens with the gap. So the actual day movement is not that much, it's 5 paisa or 6 paisa. With the costing of 2 to 3 paisa, there is not much opportunity to make. While euro is doing better in terms of the volatility, there is more opportunities for them. So the scope of trading is changing from the dollar INR to euro INR, because end of the day it's an opportunistic market. You have to go where there is an opportunity lies.
Mr. Venkatraman, is the market riding the volatility? Do you see those spikes coming in the exchange when there is volatility in the Indian markets or the global markets?
Yes, intraday volatilities are very much there, and RBI is standing on either side of the market to protect or smoothen the volatility so that nobody is unduly injured because of the excessive movement in a currency during the day. So that has been the stated objective. It has been stated by the governor in the monetary policy in very clear terms. So to that extent, I would say we are a managed float, in the sense that the excessive volatility is contained by the presence of RBI in the market. So.
Sure. Mr. Mitra, you talked about so many currencies. If you had to trade, if somebody should be coming into the market for the first time or should be trying this market out, as according to the volatility, should they be starting with USD INR or any other currency in the market? USD INR. Sure. And you also talked about that there is a possibility of the rupee going on a declining way further as year.
Provided that this crisis continued for some more time or get worsened. Otherwise, no.
Okay. Pramit, let me come back to you on this one. We have seen the rupee continue to decline. There are so many factors. People talk about inflation. They also talk about the interest rate scenario into the markets. How informed is an investor when he comes to you and wants to play currency?
Well, we would like to give them the picture that what is happening in the Indian market as well as the global market, because majority of the time if you see that rupee is driven by the global factor rather than the domestic factor. Be it equity market, because when the equity market is not doing good, it's affected to rupee because FIs are pulling their money back. The same way there is a crisis in US and Europe that growth is going to decline. Our economy is directly related to them as the export of the softwares and other industries there. So we would like to give them the picture. If you talk about the recent scenario where the rupee has depreciated so much, it is actually contrary to what has happened across the globe, because after the rate cutting, dollar should have declined. But due to the domestic factors and the payments of the oil importer, there is a scarcity of the dollar within the country. And the interesting factor to see that the price between the spot and the future has come down. Normally, if you see there is the gap of the future and the spot price around 20 paisa, now is around 8 paisa. So that is the factor which we would try to represent to our clients, that what are the factors which is driving this scenario.
What is your view on this, Mr. Venkatraman?
I would say the camps like this will definitely give a very good insight into the market participants as to what they should look for these currency movements. There are domestic factors influencing the currency. There are global factors influencing the currency. Sometimes there will be an overpowering of the global factors. Sometimes there will be an overpowering of the domestic factors. The interactions in seminars like this will give more insight into the market participant, be it they corporate or traders, to get into what aspect they should look into before they actually trade currencies or hedge their currencies. So to that extent, I will say these educative seminars will be very useful exercise, and effectively I would say that in a way you are even fulfilling the stated government objective of financial literacy for the financial inclusion.
Well, that were our panelists, but let's go across to the Hyderabad audience now, who turned out in huge numbers, and this is what the feedback that they had to give.
This currency camp is really useful, those who do the trading, forex trading, especially for the currency. Actually, it is introduced in India very recently, but it is known for the Europeans and Americans very well. And this market is very huge if you compare with the other stock markets. All together, all stock markets together is equivalent to the currency market. So that big this is.
Today's seminar currency camp is really excellent. It went on exceedingly well. It is very informative, educative to all citizens of India and abroad also. The panelists, they very well covered about global economy and Indian economy, even a local economy also.
It's nice that we have such seminars which give financial literacy to the public. But the only point that really these people have to make the general public aware of is who is the final gainer of these camps. In India, what we are supposed to see is that the amounts that we are investing it should be of at least a minimum limited period where they gain at least some money. It's not that everything is left to the investor to decide.
Well, with that, it's wrap up from Hyderabad, but we will be soon traveling to another city for a new edition of Currency Camp.